Good evening, my fellow friends. It's my honor to meet everyone here again. Thank you for your support. I would like to greet everyone a warm welcome. For those who join us for the first time, welcome to our Patron live sharing class. It's a great honor for me to be able to share with everyone more knowledge and hope everyone is able to learn something by the end of my class. Today, there's a stock that I want to share with everyone. And this stock I have been tracking for some time, and I shall call this stock the weekend golden pick. So friends, if you guys want to find out more about the stock, please stay with me throughout the class for more details. Besides that, I also continue to do my best to share more high quality stocks and lead everyone to a better future. Thank you once again. Okay, let's take a look at our stock market situation today. So today we are going to share also 6 topics. Okay, let's start off with the first topic. Okay, which is the Nifty index. The Federal Reserve decided to keep interest rate unchanged and hinted at a rate cut in 2024. Leading to a global market rally, the domestic market also opened higher with all industry indices rising, especially the information technology and the real estate stocks. The indices opened significantly higher today, breaking away from the previous high velocity range. After a brief morning rally, the market traded in a narrow range near the highs for the rest of the day. We have been telling everyone since the index price broke the yearly high that because it's a historically high, there are no clear technical reference points above. The best strategy is to follow the market, making short-term adjustment while sticking to the market direction. Okay? In the previous trading sessions, the index price pulled back and found support at the 10-day moving average before rising again, which has the most notable occurrence since last October. Therefore, we have reasons to believe that the MA will continue to be an important reference in the near future. But it's important to note that it's not only the factor to rely on. Okay, let's take a look at the next chart. Okay, for this is the weekly chart for Nifty index. Friends, do you still remember when we shared the weekly index chart the last time? I actually pointed out that the 2 large bullish candles indicated a continued rise for the week. Even though we now know that today's sharp rise is due to the Fed, which FED, maintaining interest rate, we didn't know this during last weekend, right? Why were we able to predict it in advance? Okay, friends, as long as we study seriously, it's actually quite simple. Let's take a look at a few points. Firstly, the Nifty index itself is an upward trend, and this cannot be changed. Secondly, the 2 previous bullish candles are very, very strong, breaking through the previous high and reaching a historical high. And third point, we can observe the MACD indicator, which is over here. Okay, the fast line and the slow line is crossing above the 0 axis, which is also a strong bullish signal. With these 3 points, it's very easy to conclude that the upward trend will continue this week. The techniques that I just discussed are the most basic and commonly used in stock market. They are not complicated and can be mastered and applied proficiently through short-term learning. So whatever I share with you guys, I hope you guys do practice and actually take some time to listen back or learn. Okay? Let's move on to the next topic, macro analysis. Okay. India has been the fastest growing major economy in the whole world over the past 2 years. It's entered a rapid takeoff phase of urbanization, industrialization. It is expected to maintain its leading position through 2024. According to the International Monetary Funds, the gross domestic product, which is the GDP, is projected to grow over by 6% in 2023 and 2024. The compound annual growth rate will be slightly higher than China, which is around 4 to 5%, double the overall global economic growth rate of about 3%, and 4 times faster than in the advanced economies by 1.5%. For structural reasons, India is likely to remain the world's fastest growing economy throughout much of the next 10 to 20 years. The combination of a fast growth is an already very large economy ensure it will be one of the largest, if not the largest contributor to global growth throughout the 2020s and the 2030s. It can be said that India has enormous development potential as the world's most populous country with a young age structure. It shares some similarity with China. Currently, India's economic growth, the rate has begun to exceed that of China and is expected to further distance itself from China in terms of economic growth. With strong economic development and increasing corporate profits, a solid foundation is provided for the soaring India stock market. It is often said that a bull market in the Indian stock market presents an opportunity for everyone. So, how can one leverage such an opportunity to increase their wealth? We at Petrons Ventures will further serve the Indian market, enhancing and expanding our reputation and awareness. Since entering the market of the Indian market, we have diligently provided services to our friends and have received unanimous recognition. While some friends may have joined us recently and may not have seen any profits yet, but we are confident and capable of helping all our support friends and earn higher profits. Okay, for this, in November, retail inflation surged a 3-month high, and with factory output in October growing significantly to 16-month high. This may indicate that the Reserve Bank of India, which is a RBI, may cut interest rate until the mid of 2024. The Monetary Policy of Committee of RBI in the last meeting held from 6th to the 8th of December, mutually agree upon to maintain the policy repo rate at 6.5%. RBI Governor Shaki Kanta thus note that the rate actions taken so far are still impacting the economy, and the Monetary Policy Committee has decided to continue to watch the exit from accommodative policies to ensure gradual convergence of inflation to the target while supporting growth. So, why do investors care so much about whether the central banks cut the interest rate? It is because any adjustment to the central bank's monetary policy take time to reflect in the real economy. And the most direct impact is often seen in the financial market. Any interest rate cut by the central bank, regardless of its magnitude, can directly simulate stock market gains. The Indian stock market is a super uptrend period, currently benefiting from both the country economic development and strong industry profit growth. It can be said that there is no immediate need for interest rates to be cut to boost the stock market rises. However, if the RBI starts cutting interest rate after mid-2024, it will serve as a stabilizer for sustained stock market gains for a long time in the future. Okay, let's see. Let's move on to classic tactics. Okay, yesterday I shared with everyone some content about stock price limit up. And today we will continue to share related techniques with everyone. Tonight, I will explain to everyone from two aspects. Okay? First, why is there a stock price limit up? In fact, this question may not direct make us any money. It can help us to understand the market in a more microscopic way and know the reasons behind it. 2. We need to study what types of stock price limit up exist and which type of stock price limit up are suitable for ordinary investors to identify, to utilize in order to earn more profits. Okay, let's see the first question. Okay, the first question, why do stock have limit up? Okay, from the history of the stock market, the introduction of limit up and limit down is a product to prevent excessive speculation in emerging securities market, originally intended to prevent excessive market fluctuations. However, the limit up and limit down system actually serve two purposes. Okay, for A, it is when the stock itself has a sudden impact of 10% or more. Such a sudden significant positive news or market reversal, okay, being stopped at 10% or 20%, and the next day, due to the original rise requirement, it continued to rise. This presents a clear speculative opportunity. It's important to note two aspects here. One, whether it's 10% or 20% or other percentage, each country stock exchange has its own regulations. Point number two, there is a clear profit opportunity. Okay? Let's move on to point number 2. The limit up and limit down have a significant psychology impact on both buyers and sellers of the stocks. After a stock hits the limit up, for those who originally wanted to sell the stock, they will raise their psychology expectation and sell at a higher price. For those who want to buy, because they cannot buy, it strengthens their determination to buy at the higher price. Therefore, the limit up and limit down have a significant boosting and depressing effect. When a stock is about to hit the limit up, if you can timely judge that the limit up will be firmly pinted at the limit up price for the day, then immediately chase in the high point that appears the next day will give you a very good profit opportunity. And point number 3, the limit up originated from attention of major funds. The stock price limit up is the result of the operation of major funds. The limit up realizes the strategy and tactical intention of institutional major funds. Firstly, it demonstrates effectiveness, attract the attention of market investors, displays its own strength, and reveal operational intentions. Secondly, it strengthens the absorption of stocks in the market. Thirdly, it quickly departs from the cost zone, pulls up after hitting the limit up, and continue to rise, continuously hits the limit up and departs from the cost zone. Pull up in a step-like manner and rise out of the cost zone. In actuality, the key point we are discussing here is the aspect of funds. It can be clear to everyone that when a stock price hits the limit up, it definitely the result of the operation of large institutions and major funds. Although individual investors are numerous, they are essentially scattered. And even if the total amount of funds can exceed the institutional funds, they cannot form strength of the funds of the. Therefore, it can be said that individual investors truly want to profit in the market. They must stand on the side of the investors or the funds and become their friends. Okay, this is one of the kind of limit up that we will see in the market called T-shaped limit up. Okay, so let's take a look at this limit up. Why should we learn about this? It's actually quite simple. In order to make more money, we can identify and utilize these limit up stocks, seize more opportunities, and be able to quickly make money, which is here. Okay, let me explain. First, let's look at the T-shaped limit up stocks. This type of stocks belongs to a very strong category of stocks. As long as the limit up position is not high when it hits its limit. Okay, it's not high. It often continues to rise afterwards. The huge short-term profit potential. Take the graph as an example. We notice that there are two T-shaped limit up, which is here. Okay. In fact, the candlestick pattern after the two T-shaped limit up can be also considered as a T-shaped limit up, which is this. There are two, which is these two. So if we can buy the stocks on that day of the T-shaped limit up, we can then reap the profit potentially of 3 limit up positions, which is this 3. If we can buy here, we can reap this 3. Okay? Of course, in actual trading, we may not profit from 3 limit ups, but even profiting from 2 would be a very significant profit potentially. For ordinary investors, how can they buy such stocks? First, we need to establish a stock pool of limit up stocks. Okay? And then focus on tracking and trading opportunities of this stock every day. Okay? I mean every day. Using the example in the graph that the market actually provides a buying opportunity on the day of the T-shaped limit up, even though the stocks open at the limit up price and may maintain it for a period of time, then breaks through and drop in price. From the perspective of the market psychology, when ordinary investors find that the limit up stock suddenly drop rapidly from the limit up position, what will they think? Or what will they do? It's actually very simple. They will panic and sell away all the stocks. Here's a question. If it were you, would you do the same? I think most of the people will. Okay? What happened at this time? So, who is buying this stock then? It can be clearly stated that the stocks sold by ordinary investors will be bought by the institutes, which is exactly their purpose. This is their purpose. You sell, they will buy. Only when there are more chips in hand can they make more profits after the price rises. Okay, let's move on. Okay, these have 2 sections. This is section A. Okay, let's take a look at the second type of limit up, which belongs to a category of stocks with relatively small candlesticks bodies. Okay, we call this body. Okay, when they hit the limit up, this type of limit up is also very strong. It's a very strong type of limit up. Okay, in this type, the stock price rises steadily after the opening until it reaches the limit up. The opening price is the lowest, and the closing price is both the highest and the limit up price. The reason for the small body of this candle, we call it candlestick, is mainly because of the significant opening. The higher the opening position, the smaller the body of the candlestick. Its trend is therefore stronger. Okay, you can see from here. As shown in the chart, for such a stock that hit the limit up, we often cannot intervene in the first upper limit because we do not know before it hits the limit up if you can buy the stock, it is for some other reasons. Therefore, the opportunity to trade this type of stocks often lies in buying on the second trading day when the first limit up appears. Okay, so we cannot actually predict this one will form a limit up. So normally we only can see this opportunity, we go for the second trading day, okay, which is here. Okay. There is a problem here because of the higher opening price, because the price definitely will be higher, right? On the second trading day, many ordinary investors may concern about this high and miss the buying opportunity, because a lot of investors will think that the price is too high, they are not ready to buy it, they might wait for some better opportunities. Okay. Therefore, compared to the T-shaped limit up stocks, this type of limit up stocks provides more buying opportunities in the market, because lesser people buy. They are afraid. They see the price too high, they don't buy. So it gives us more opportunities. Am I right? And the real obstacle here comes from the traders themselves. To trade this type of stocks, investors often need to overcome their own psychology fear, as there are no technical issue. It's all about yourself. Okay? Let's move on. When it comes to candles with small real bodies reaching the limit up, let's look at another case. So this is part 2, okay? It is important to take note that the charts and stocks we see here are only for examples and for explanation. And we are not suggesting that anyone should buy the stocks in these examples. Okay, these examples are already previously. Okay, this point needs to be clear. In this case, there are two candles with real small bodies reaching the limit up, which is this two, which is smaller. Of course, there has been already limit up before this, right? Which is this. From a trading perspective, when you see a candle at point 1, would anyone dare to buy such a stock because of a significant higher opening price that day? If there is even a slight hesitation, it will rush to the limit up price. If you hesitate a while, it might rush, or you can rise up very quickly. And there is basically no more opportunity to buy. Correct? And at point 1, people dare not to buy the stock, let alone at point 2. You think that if you don't dare to buy at point 1, do you think that you will dare to buy at point 2? Here is an important note that buying the stock requires chasing price higher, which is not the same as we always usually say, buy low, sell high. No, it is the same standard. It's not the same standard. Okay, for here, we are different. We got to chase. Okay, once you see it, we got the opportunity, we buy. Because the stock reaching the limit up are strong stocks. And in order to trade strong stocks, it is necessary to chase the higher price to achieve the goal that we all want, which is higher profit. Therefore, there are many methods for trading stocks, and the key is to find the right method for the right stock and the right trader. Okay. Next, we will look at the third type, which is a candlestick with a relatively large body indicating a limit up, which is something like this. Larger body, because the first two we've seen are smaller bodies. This is considered a larger body. The intraday trend of this type of stocks is often very strong. The advantage of this stock is that the starting point of the rise is not too high. The bullish force of this kind of name up stocks is very strong. And no matter how many sell orders there are in the intraday market, they will be all bought up until the sellers realize and stop selling. Okay. In terms of trading, the advantage of this type of stocks is that it gives traders enough time to buy. Because just now I say, short body, by the time you want to buy, it's already gone. But for this one, we have enough time because the body is a larger body. Okay, we have more time. In terms of trading, the advantage of this, as I say, it gives more time, but the downside is that before the limit up, no one knows if the stock will hit the limit up that day. Meaning that what I'm trying to say is that for smaller body, we can buy, it hit very fast. But for a larger body, if we buy, it's uncertain whether it will be a limit up for that day. Okay? Therefore, even if you buy this stock, the original reason for buying it is not necessary because the stock is going to hit the limit up, but because other reasons prompt investors to buy and operate. For individuals, traders, if they use technical analysis to trade stocks with limit up, regardless of which of these three situations mentioned above, they basically cannot buy at the first limit up. Okay? Okay, let's move on to next topic. Wall Street quotes. Okay. Okay, for today, I want to share a topic with you, something called Wall Street quotes. Okay, why do I want to share this topic with you today? As friends who are learning and communicating in this live class, you should all know, you should be as a stock investors, okay? I also hope to share what I have learned with you and hope it can help you in your future stock trading process. In fact, stock trading is an old industry. In Wall Street 100 years ago, railroads stocks and steel stocks were popular, followed by radio stocks and television stocks. And for today, computer stocks and internet stocks are popular. The rise of each type of stocks represent a new industry and progress in human civilization. In this ever-changing stock market history, the only constant is the movement of the law of stocks. Like our ancestors over 100 years ago, and even earlier, modern people have the same greed, fear, and hope, and are unwilling to cut their losses when they lose money. I believe we have friends might be like this, okay? They are satisfied with small profit and withdraw from the stock market midway during a bull market. This is a wrong thing. The stock market was full of rumors back then and is still full of rumors today. Companies falsified accounts in the past, and companies still falsify their accounts today. For hundreds of years, the predecessor of the stock trading industry have written down rules of conduct based on their experience, which are principles that must be followed to survive and succeed in this industry. These principles applies 100 years ago, apply today and will still apply 100 years from now. Because human natures will never change. To write down all the Wall Street quotes, at least about 200 pages are needed. And most of them are useless. Here, I have sorted out some important rules that have been proven effective in practice. I hope you can remember them firmly. Of course, after all, these are quotes left by the Wall Street. Because the target audience is different and suitable scope must be different. Just like the family rules, they are suitable for individual investors and may not be suitable for institutional investors. And those that are suitable for institutional investors may not be suitable for individual. So today I will only share two, okay, with you guys. Okay, number one, avoid buying too many stocks. Okay, why talk about this topic today? Okay, because many friends hold too many stocks. In fact, the last time I talked to everyone about this topic, if you buy too many stocks, what's the difference between that and buying that index? If you go and buy so many stocks, why not just invest in the index? Correct? Even you hold so many stocks, the overall performance may not be as good as the index performance. Why should everyone avoid buying too many stocks? This is the question. First, ask yourself, how many phone numbers can you remember? The average person can remember 100. What about you? When you have too many stocks on hand, the result is scattered attention. Your attention is scattered everywhere. Okay? And a loss of feeling for individual stocks. I have always emphasized that you must always have a sense of whether the stock movement is normal, and only on basis is it possible to control the timing of entry and exit. Buying a bunch of different type of stocks, wanting to buy a little bit of every stock that is listed, is a typical mistake for beginners, because attention will be scattered as a result. For everyone, I personally suggest focusing on the 3 to 5 most potential stocks, and as experience increases, gradually you can increase the number of stocks to maybe up to 5 to 8. Okay? Next, when in doubt, leave. This is a rule that is easy to understand but difficult to follow. Many times you simply lose the sense of the stock trend, not knowing whether it is going up or down, or whether it is an uptrend or a downtrend. At this point, your best choices is to exit. Exiting doesn't mean not trading stock, but rather not touching that particular stock. If you have that stock on hand, sell it. If you don't, then don't buy it. We have long understood that the key to winning in gambling lies in having a winning probability of over 50% each time you place a bet. Meaning that you place a bet, you only got 50% chances of winning. As long as you still hold stocks without a sense of direction, it means that you have not withdrawn your bets from the gambling table. When you are unsure of the stock trend, your chances of winning are only 50%. Professional gamblers will never leave their bets on the table at this time. Okay? On this point, I think every businessman should understand the principle. If you are a successful business person and have two opportunities in front of you, one is your familiar industry, and the other one is unfamiliar industry. Which opportunity would you choose? Currently, everyone is learning to become a stock market expert. So it's worth setting higher standards for yourself. Okay? Let's move on. Stock analysis. Okay, let's talk about the stock. Okay, this is Star Health. Okay, all right. Okay, now we're going for a very important stage, which is to review the stocks that I have recommend to everyone. Okay, me and my team. Regardless of the stock prices, whether it's rising or falling, as long as it's a stock that we recommend, we'll continue to track and observe the stocks for everyone. Since entering the Indian market, Petron Ventures has always adhered to the attitude of being responsible to its members and serving everyone. We will track all recommended stocks until they are profitable. Okay? Therefore, we have also won the trust and support of our members and friends. So once again, I will say thank you, everyone. Okay, let's start off with today's stock, which is the Star Health. Looking at Star Health stock, Star Health is India's first standalone health insurance provider with coverage expanded to include health, personal accident, and overseas travel insurance. It offers policies tailored to individual, family, and corporate needs. Star Health is one of India's largest private health insurance company. As for other fundamentals information about this stock, I'm not discussing about it because I've covered it a few times. Okay. So in recent days, the stock has not been seen any upward movement. Okay, you can see from here, not really any upward movement. Causing some, I believe, will cause some of the stockholders being anxious about it. Firstly, it's more important to note there are no bad news about this stock. The temporary lack of upward movement is mainly due to the absence of driving force. The main market makers for this stock currently has no action plan. Hence, the stock price appeared somewhere subdued. Technically, it is currently in the process of oscillating and forming a base. Once the bottom formation is complete, an immediate uptrend is expected. So friends, please understand that I personally very willing to help everyone to make money. And even more, hope that everyone can make even more money. Of course, stocks we recommend have been carefully selected as high quality stocks. I take quite a time to search for all these stocks. Whether the stock price rises or not, or does quickly or slowly, it does not affect the stock's fundamental situation. So please rest assured and please continue to hold on. If there's any changes in the stock fundamentals, we will notify everyone as soon as possible. Okay, let's move on to the next stock. Saregama. Saregama India Limited was established on 13 August 1946 and was taken over by the RPG Group from UK, EMI, in 1985. The company is currently managed by the chairman R.P. Gonanka. It is involved in the manufacturing and sales of music storage device. Sorry. The company is the most renowned audio entertainment company in the India subcontinent. We won't discuss into some other basic informations about the company because I've discussed about the company before. Technically, it is clear that the stock price is clearly within the range of fluctuation, and the fluctuation range exists in the form of a channel, you see, within these two. Okay. Let's look at another point. In the previous period, the stock broke out a triangular pattern with a large bullish candle. Can you guys see? Okay. Currently, the stock price is in the it's actually genuine and effective. This large bullish candle. Today, the stock price has once again tested the support. Okay, can you see? And then stop falling. Currently, the stock price is in a fluctuation mode. So, wait patiently for the price to break upwards. Furthermore, if you look at the weekly chart, okay, today I didn't share the weekly chart, okay, but you can go back and check on the weekly chart. You will find a clear bottom signal indicating that the stock price is bottoming phase rather than a phase of significant increase. It is advisable to hold patiently and wait for the price to rise. Okay, let's move on to the next stock, which is Clean. Okay. After a significant increase over the past 2 days, Clean continued to rise today. However, as the price approaching the previous high, there was a slight upward retracement. Okay, see, previous high. When you reach, drop back a bit. The stock momentum is pushing against the resistance level. After the substantial increase in the past 2 trading days, it is unlikely to break the previous high unless there is a very strong trend. As mentioned earlier, this stock once had a classical buy signal triggered by the MACD at the bottom. See? It's over here. Okay? So today, we are not focusing on this aspect, but we will schedule a session in future, especially to discuss the relevant techniques and skills of the MACD. We are currently having a relative large profit margin in this stock. Those who actually follow me, I believe there's a big profit margin. So it's advisable to hold for more or for now and follow the market. When it's time to take the profit, I will inform my assistant to notify everyone. As for now, let the profit grow. Okay? Let it grow. Okay, next stock will be Kota Bank. Okay, let's take a look at Kota Bank. Okay, Kota Bank is engaged in a commercial banking, investment banking, stockbroking, car finance, asset management, and life insurance. The company has excellent operating performance, and all economic indicators are steadily rising. Today, the stock has risen again and reached a new high for the past few months. Okay, over here. Although the closing price is not above the previous high, a new high is still a new high. In the chart, we can see that the current stock price movement is a pullback confirmation after breaking through the previous high. And this action has been completed. Additionally, we should note that MACD below has also issued a bullish signal, as was discussed previously. Okay. Similarly, there is no need to repeat the discussion, okay, on the head and shoulders patterns. The most significant technical point is the ionic bullish candlestick on 4th of December. For this type of stock, it's better for everyone to have a little more patience and hold on to the stock, letting the profit to soar on its own. Okay, as I say, there's a weekend golden peak, right? So, for this golden peak, this company, okay, I'll share some info only, okay, I will not review anything. This company is one of the fastest growing diversified enterprise in India, offering a wide range of products and services. Its revenue grew by nearly 100% last year, and even higher growth in the net profit. Currently, the company's stock price has broken out for a long consolidation phase, indicating an upward trend. We are actually preparing to buy when the stock price undergoes a brief consolidation. Okay, you can see the info here. Okay, I'm not going to reveal the stock name yet. Okay. Okay. As for the lucky draw, okay, congrats to some friends that has actually won and received the prize. Okay, I got some feedbacks. Okay, we still have the lucky draw for those new friends who just join us. Okay, same, look for my assistant and follow his instructions. And the prizes is still available, okay, I believe. And okay friends, so today's live sharing class will end here. And thank you very much for your strong support. And if those who are new, first time, please remember to take a screenshot, okay, and send to my assistant and complete the questionnaire. And enroll for the lucky draw. Okay, so for our next lesson will be on Sunday, 17 December 2023, 8 p.m. I hope to see everyone here again. Thank you once again for your support and good night.